Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, November the 30th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we're talking about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios. But please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolio, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, we do have a lot of economic data going on today across the pond especially, so let's get started with that. We got German retail sales coming in at negative 1.2%. Was expected to be a 0.3% on the positive side. Now, if you remember, yesterday we also got some retail sales coming in, consumer spending coming in from the French side, and that was also pretty low for all intents and purposes. So the spending over across the pond not looking so great at this point. And then we also got the German unemployment change came in at negative 18,000, was expected to be a negative 10,000. So that means that more hires were happening. So then we also got the CPI, Consumer Price Index, flash estimate year over year came in at 1.5%, expected to be 1.3%, just slightly lower than expected. And then core CPI came in at 0.9%, expected to be 1%, so only slightly lower there. Then here in the United States, we got initial unemployment claims came in at 238,000, expected to be 241,000. So unemployment claims lower, that's better for the overall economy. Then we got our core PCE, which is personal consumption expenditures price index came in at 0.2%, expected to be 0.2%. They revised last month's number slightly higher from, 0.1% to 0.2%. Personal spending here in the United States month over month came in at 0.3%, expected to be 0.2%. Last month's number revised down though from 1% to 0.9%, so that's kind of a wash there. Personal income, nice thing there is we got an increase and no revision to 0.4%, expected to be 0.3%. We'd like to see that personal income moving higher, which we haven't really seen a whole lot of. We've been seeing more of the personal spending going on rather than the personal income going on. So, and then we got Chicago PMI, Purchasing Managers Index came in at 63.9, expected to be 62.2. And finally, natural gas storages came in at 33 billion cubic feet, expected to be 37 billion cubic feet. Also, we have a couple of Fed governors speaking. Quarles is speaking, and so is Kaplan. So both of those guys could be market movers, as we've seen a lot of these Fed governors really kind of ramp up their chats and talk about interest rates. So on to crude oil futures, slightly in positive territory right there at $57.50, kind of sideways, despite the fact that we're seeing nice moves higher, and like the Dow Jones, we'd expect to maybe see that move even higher with that drawdown and the economy doing better. So I would think that that would be driving a little bit of speculation for demand of crude oil. Gold right down to the point of control. This is that line in the sand on the Fibonacci 61 fib level that I've talked about. Really isn't going to act as necessarily a support and resistance, but now it's going to act as a magnet as the most time and volume has been spent at that level. So that's going to be its comfort zone. I'd still like to see gold go down there and test that 1250 area in the next few weeks. That's what my speculation is, as we start seeing the equities do well and the economy do well. That should be a damper on the gold bugs, if you will. Bonds slightly lower on the day after yesterday's big sell-off. You know, we talked about this. Interest rates increasing, bonds really just can't sustain an upward trajectory, because that would indicate that bond prices are going higher and the interest rates are going higher. that doesn't work in tandem. When interest rates go up, it's kind of like, let me find something here. It's a teeter-totter. As interest rates, if this is interest rates and this is bond prices, interest rates go up, bond prices go down. If bond price or interest rates go down, bond prices go up. So it's always that lever and pulley. You can't have that just migrate off of the fulcrum, if you will. So bond prices are going down as interest rates are speculating to go up. So that is intuitive, if you will. So that working in that direction. One thing that's a little bit funky here is we got the VIX moving higher. We got volatility moving up as we're getting to these newer all-time historical highs in the equities. And that is a red flag in a sense. Usually when we see that go up, everybody's hunky-dory, but it seems like there's a lot of buying going on, but there's a lot of put buying going on as well, just for protection to the downside. So it's something to note that we're seeing VIX go up with the overall equities. So let's get on with the equities. We've got the Dow Jones Industrial Average up over, what is that, 182, almost 183 points, just gapping every single day to the upside as the overnight markets are pushing these equity indexes higher. This is the average, so it isn't an ETF for the Dow Jones, so it will show those gaps. It doesn't show any overnight movement, but again, today the Dow Jones just rocketing higher. The NASDAQ again. Well, yesterday it was down big as people were flying out of tech. We saw Nvidia going down, even Apple, Adobe, esports, a lot of those tech sectors, Texas Instruments were getting beat up as people were flooding into the financials. And I talked about that a little bit yesterday. So NASDAQ was really down yesterday. Today, we're seeing that nice rebound. It was down over 100 points almost yesterday. So up 53 points in the NASDAQ. And then if we move on to the E-mini S&Ps, you can see yesterday I talked about we needed to keep an eye on this doji here as if it were maybe a top, and the confirmation settle below that would be an indication that the market may have topped out. Today, blasting off again, up 19 points, not showing any kink in the armor, that just basically showing there was a bit of a pause. And today, blasting up, there is no sign of the downside at this point. And as you can see here, a new all-time high just being created as we're sitting here talking, just about 75 cents off of that all-time high, or three quarters of a point, if you will. But the overall market moving higher, and we might even get to see a print here higher yet while we're talking. But creating that all-time high, and there it is. But yet overnight inventory, you can see, was long, and the overall market just shrugged that off and off to the races to the upside. Now, I haven't done a whole lot, but there are a few things in my portfolio with this massive rally that I'm going to have to really keep a close eye on. If you guys remember in the 3M quite a while ago, it just did not get volatility to come out of this market enough to get out for 50% of my max profit, and the market has turned around. Volatility's gone up, and this is one of those strange instances where we're seeing vol increase as we continue to rally. Usually we're going to see volatility come out of those as the market rallies, and we're not really getting that. So I'm getting the double-edged sword right now with 3M, and in 3M I'm short the the January. I'm short the December 240 calls in there. So right now, as you can see, 240 has been tested, just slightly below that, just slightly out of the money right now. I'm sticking with being mechanical, knowing my probabilities of this being in the money at expiration from when I set it on, or I put it on. So only about a 20% probability. I'm going to stay tight with that. Looks like it could be kind of topping out here. Hopefully we can get a little bit of a correction in the next few days and pull away from those calls, get some volatility to come out. But right now it is testing me, but I'm going to hold true to playing the probabilities at this point. If we move too much higher, I'm going to start getting a little bit more aggressive with it, maybe sell some puts or something like that to increase my break even on it. But at this point, I'm just holding on to it with 15 days left to go. Same situation with UPS. UPS has just had a massive move in the last few days. Had close to a chance to getting out of this for 50% of the max profit. If you remember what I did with this trade, I added to a trade when I sold the December 120 calls in there. Market started coming off, but I didn't get volatility to really come out of it. Volatility started increasing. So I took advantage of that and then went in and sold the 105 puts. Now those 105 puts have worked out very well and are decaying, but that volatility increase is kind of holding some of that value in those puts. Having said that, I'm looking at possibly rolling up those 105 puts to be a little bit more defensive with that. That's going to be, I'm going to be keeping an eye on that later on in the day and tomorrow, whether or not I'm going to roll those puts up and try and collect a little bit more credit to increase my break even on that as well. Might roll it up, those 105 puts to the 120 puts, and then I'll basically turn that strangle into a straddle. So that's how we stay mechanical with that. Right now, it's just tested it. I usually look when my break even on those 120 calls is tested to roll that up, and it is quite close to that, to be quite honest. It actually broke through that break even, but I'm holding off on it right now. I think that this area up here is going to act as a major resistance for that particular stock, which is UPS. So I'm going to look for that, but I am going to stay mechanical with it. I'm going to keep an eye on it and possibly move that up. But that's about all I've done, or all I'm looking at. I haven't added anything or taken anything off today. Just keeping an eye on it, staying patient, and possibly need to get mechanical with those two there to defend my two short calls. All right, or my short calls in those two stocks, I should say. That's all I got for you guys. Tomorrow, we're going to be doing a webinar on the long call spread. So now that we are breaking above and continuing to go, it looks like a Bitcoin kind of move here where, well, Bitcoin's actually quite down today, but that massive move higher that we're seeing in across the pond or across the board with equities could be a good time to start doing some long call spreads, especially if we're going to see this type of situation where we get a vertical move in equities and volatility increases. That is a win-win for the long call spread. And I'll talk about all of those details in the webinar and how you can take advantage of that. So if you can't take that, take it easy.